Hiya and welcome to this week's episode of Inside Property Development, where I'm speaking with Mike Keaveney, who's the Director of Land and Development at Grainger PLC. It's a really good one. We're talking about loads of interesting stuff: SME development, viability, affordable housing, and all of the important things that need to happen to help get more good quality housing created. Michael, thank you for coming.
Pleasure.
Okie doke. Right now, so before we start, I usually ask people to give us a little sort of quick CV in terms of how you got started in the industry and how you got to where you are now. Really.
Yeah. So, quite a long-winded route. My father was a builder, and we were doing an extension on our house, and I suspect I would have probably followed him into the family business. But a guy came around with a clipboard, and he was wearing a suit, and I kind of thought he looks like he's in charge. And it turned out he was a building control officer. So I kind of thought maybe I'll do that. And my dad was keen for me to do other things if needs be. So I looked into what was required to become a building control officer, and it was a building surveying course. And I signed up to. I was lucky to get a place at Reading Uni, which was a really great course. And yeah, my career started there really, and I did 5 years of that. Then saw people in suits calling themselves project managers, taking credit for my work. So I thought, well, that sounds like a good job. So I moved into project management. I moved to Frank and Andrews after about 5 years being a building surveyor to work on different types of things. I generally did residential when I
Yeah.
was estate regeneration and conversion of houses into flats, all that sort of stuff as a building surveyor. But this opened up opportunity to work in offices, retail, museums, lecture theatre. It was very wide and varied. And I worked there in project management. I became a director of their project management company, Osprey, and then started to work for developers a lot and kind of headed up the development services, development management, project management services to developers. And then thought, oh, that looks like I could do that job as well. So I was also running the company, the office for Osprey. So I realized that when you're running a business, you can't just apply project management methods, that it's much wider than that. And I also wanted to do more development. So I went to Reading and did the MBA in real estate and construction there, which gave me a bit of everything and really useful course. And then on completing that, one of my clients offered me the chance to come and be their development director. And so I went and took that role. I was there for 17 years, really learning development from the ground up. And then 8 years ago or thereabouts, I was given the opportunity to join Helen Gordon at Grainger and run the land and development team there. And I'd worked with Helen when I was back at Osprey as a project manager when she was at Railtrack Property. I did some really interesting things there. So it was nice to reconnect with Helen. So
Yeah.
that's my CV.
Okay. Very good. So we'll come on to the Granger bit where you are now. But so where was the 17 years? What were you doing there?
I worked for a small Canadian developer called Ridgeford, which then morphed into a company called Concord London. So one of our backers eventually bought us into their bigger business. So Concord Pacific is a very, very large condominium developer in Canada, in Vancouver and Toronto in particular. You know, they've built most of the skyline in those two cities on the waterfront. And that gave us some really interesting firepower. So we were able to do much bigger schemes. So we did a 50-story tower at Worship Street in London, residential, with Foster and Partners, and Marylebone Square behind the Waitrose on Marylebone High Street, which completed a couple of years ago. So it massively increased our firepower.
Yeah, interesting. I actually we'll talk about Ridgeford a little bit because I do, believe it or not, know them. We actually bid on some similar stuff years ago when I was at, I remember, I think it was when I was either at Barrett's or I started doing a bit of
Yes.
development
Yeah.
consultancy after Barrett's. so so let's just jump back a bit because so before you were actually a developer yourself, so 17 years at Ridgeford, you were sort of doing some development management
Yeah.
stuff and
Yeah.
things like that for
Yeah.
other developers.
Yeah. Yeah.
What sort of developers?
Railtrack property for a start, and then other just general. So either office or resi developers might be generally small companies.
Yeah.
So the high net worth individuals, because otherwise the large developers obviously had their own in-house teams.
Yes. Yeah. Yeah.
So again, a bit of office, bit of retail, and I was one of my main projects was actually the Victoria Station master plan for Railtrack property, and I also worked on a building called Tournament House at Paddington for for Railtrack property then. So those type of clients really.
Interesting. I'll tell you for why I ask, right? Because so for me, just as an example, so I was a small SME developer. I then realised I had a lot to learn, so I decided I wanted to work for a PLC house builder for a few years to get knowledge and experience. And then, after that, I carried on as a slightly bigger SME developer, yeah? But I have always believed, maybe wrongly, so this is what I'm trying to get to the bottom of, that, development, this could be absolutely wrong, right? And I'm sure you'll put me straight now. The 10 years in the middle working for the PLC house builders, they've got everything in-house, yeah, as you know, so they
Yes.
sort of do it all themselves, yeah?
Yeah.
Smaller SME house builders also tend to, and bigger ones, do it all themselves, but they outsource a lot more to consultants, right?
Yes.
So as long as you're really good, you know your stuff, you can, but probably the best thing from my point of view about being an SME developer is you can actually do a lot of stuff, including some very big deals, without having a massive team, as long as you know what you're on about yourself, so you
Yes.
can coordinate and manage everything. That's
Yes.
what my view. I don't know what you think about that.
I think we share exactly the same views. So the reality. So in my career, I've often been approached to work in land buying or work for one of the big developers, and what's always put me off is the fact that they do it in house, but they're effectively a machine. So they silo. So you'll do land and planning,
Yeah.
and then you'll do delivery, and so you don't get the feedback loop, and also you don't deal with treasury and raising debt. It's all done for you. Working for effectively what was a two-man band in London, you were doing everything, even making the tea for the people that came into the office.
Yeah.
So you had to know every single thing about development, from how to buy land through to how to raise the money, how to navigate the planning system, how to procure consultants and contractors, and then how to market. And you don't have that in a big developer. You're siloed.
Yeah, absolutely.
Even with commercial developers, it's siloed. And I've always felt I came up from a technical background in building surveying, which taught me a lot about building and procurement and contracts. And as I've come through, even when I was working as a development manager, project manager, you realise that development in the last 30 years has become more and more and more complex.
Yeah.
There are so many things that can impact whether the development is a success or not, and what value you should pay for land, that actually, if you don't really understand the context with some understanding of all the factors, I think you're set up to fail, actually. And I think the days of being sort of going from an agency side to a developer side is, unless you've got people around you who are technically experienced, you'll have trouble. So I don't like, in fact, with the way we run the team at Grainger, I've never liked the siloed approach. So I try and get my team to buy land and then deliver. And the benefit of that is all the things they learn through the delivery phase feeds back into the next land purchase. And what I'm creating is SME developers, in my view. They could go out and be SME developers, but it just makes them much, much, much better at buying land.
Yeah, absolutely. I mean, I think it's really important. It's like, because all of that other stuff, as the development, the technical stuff, the market stuff, everything, it all cost and time and finances and money,
Absolutely.
which feeds back to the land stage. So how can you possibly really be very good at doing land deals if you don't understand the rest of it?
I think so. I'll give you an example of the sort of things that would get missed, and I'd see them missed. If you look at a site, there's going to be a rights of light issue. So you better understand rights of light and what that really means and how long it's going to take and how you might navigate that. But the one that catches a load of people out is things like oversaling rights. So how are you going to build it?
Yeah.
And if you need to build it by oversaling someone's land, you better factor in how that's going to work and how much that's going to cost you, or actually whether they just refuse, because you have no right to oversell their land unless it's a party wall. So you do need to know the context of how you're going to deliver it when you buy land. And I guess I'm talking about urban land. So I only really work in urban regen, urban land, where there's a lot of existing townscape around you and different uses. Whereas if you're building houses in fields, it has a very different. There are still constraints, and those constraints are getting worse and worse as we've got BNG and phosphates and nitrates and bats and all that sort of stuff.
Yeah.
So it's a different level of complexity. I to a large extent, I'd say that's easier, but you can't go into it blind to all of those other things that are going to trip you up.
Absolutely. So the question I was going to ask, so before you did your 17 years at Ridgeford, which is what I would call a proper development experience,
Yes,
and obviously before that you were sort of doing development management and stuff like that. Because what was like? Because my view is, and it could be wrong, that I don't actually think, I very often say to people that development consultancy, I don't think it's really a thing, because if someone really knew exactly what they needed to know to be a really shit hot development consultant, they'd actually be a developer.
Yeah.
Because why wouldn't you?
Yeah.
Right. So I think, and bearing in mind I've never done it. I've never been a development consultant. I've never been a development manager. I've never worked for an organisation like that. I don't think you can ever really know what all of development is like until you've had your own whatsits and probably even your house on the line. Yeah. And you are properly involved in all of it. Because if you're like a consultant, at the end of the day, you get paid anyway. It's a different type of level of knowledge. It's a different pressure. So I don't know. What do you think about that?
I think you're right. So we need to define the terms though. So I originally was a project manager. When I talk about development management, that's effectively project management for developers, but maybe starting a bit earlier, like in land acquisition, maybe. But development management is not development. So development is what you're describing. That is someone who is buying land with an idea of what they're going to put on it, taking it through planning, putting the money together, then getting it built and then exiting. Development management is a service within that. And as a project manager, I felt like I was pretty good at project management. And then I felt I was pretty good at development management, which is project management for developers, effectively. And thought, okay, well, I'll do the MBA and I'll go and do development. And I joined Ridgeford. It was really interesting when I joined, because suddenly I realised everything I thought that was development and project management was the top of the iceberg. And actually, in a way, you were almost spoilt, because project management is already a project, right? If it's for a developer, they've already sorted out and you've got to deliver it for them. Even with development management, they may already own the site. Then you go and of course you wouldn't be involved in raising debt for them. Then you go and work for a developer and you realize, oh, okay, so I've got to buy land first of all in what is a crazy kind of landscape of land buying. And then great, I've bought the land. Hopefully I've paid the right amount for it. Now I've got to get planning and make it worth something. And then when I've got planning, I've got to raise some debt and maybe some equity. And you realize that development is all of those things below the water, and development management is just mopping up and de-risking and delivering what's all the hard work. And if the secret to good development is buy well, right? So buy the land at the right price, knowing that you're going to be able to put on it what you think. And where it goes wrong is you get that all wrong. And by the way, that's one of the reasons I don't like the siloed method, because if you've got a land buying department that doesn't really know how to deliver, they can buy land and they can pay too much. They can misunderstand the planning context potentially. They don't have to deliver it then. It's passed to the delivery team. And so that feedback loop isn't there. So I think development is very different from development management.
Right, just a quick one. Whether you are a massively experienced and well-established property developer already, or maybe you're a new or aspiring one, either way, you will know that it is really not easy to find viable opportunities to come up with the best scheme, the best design that's going to maximize the land value and fully de-risk things for you, and then to go on to get the very best planning permissions as quickly as possible. However experienced you are, you will know that that is not an easy thing. I have put together a super detailed scorecard based on my 40 years experience in this industry, reverse engineering everything that I've learned, including lots and lots of mistakes over the years, and everything I've done to maintain, touch wood, 100% planning track record. I'm pretty sure there will be stuff that you don't know. Go and do that scorecard. Find out just how good or not your current process is, and I absolutely guarantee you will learn at least a little something, if not a ton. So it's bit.ly /MLA score, all in capitals. You can do the Millbank Land Academy scorecard. I absolutely guarantee you will find some interesting stuff, and it will help you get much better deals. Yeah, no, very good, 100%. Well, I'm glad you agree, because because that's the message I want people to understand, because big part of this is about trying to support and encourage and grow the SME development industry. And there are people out there that don't really understand it. Most people, to be quite honest, they sort of think, well, I'd just go and get an architect and a planning consultant, and then it just happens. But absolutely, that is not, because even if you're lucky enough to find the very best architects and the very best planning consultants, of course, they only know part of it. It's, you will never really know and understand all of it until you're actually at the coalface trying to make it all happen. Yeah.
So for me, it's all about longevity. Can you navigate a whole career for 30 years in development? And the world is littered with SME developers that made some money on a scheme, might have done it twice and then fell over and lost the money. And you never hear about the negatives. You never really hear about the person that lost their house.
Yeah.
You only hear about the guy that made it big.
Yeah.
But actually, the guy that made it big or girl that made it big could be 1 in 10, 1 in 20, 1 in 30. Because we don't hear about all those stories of people losing their house. And you mentioned it earlier on, unless you've got your house on the line, you don't really know what it's like. And there are loads of people out there. In fact, when I come across people that have used their house as collateral on a development, I wince, because we know that development is actually incredibly difficult. And we can talk about how much money the PLC house builders or developers might have made, or the big bonuses that people might have made. But under that is an SME sector under serious strain, taking great risks and being effectively pushed out of the industry, either through insolvency or just there's an easier way to make money. So I think so I totally agree. I think the SME sector, those are the real developers, right? Taking real risk with their own money. And we used to have a lot more of those than we do now.
Yeah, we did. So let's come back to that, because I think this is a really, really important bit. And in terms of the reasons why they are, it's so hard for them now, and why they've all disappeared, right?
Yes.
So we're going to come back to that, but just because we're starting off with your sort of CV.
Yes.
So you're at Grainger now.
Yeah.
So tell us how it works at Grainger.
Yeah. So Grainger has been around since 1905, I think it is. And so it's been around a long time, and it was always a residential landlord from the start. And it became a residential developer as well. And, it's morphed into various different styles of development and company, and became a PLC in the 80s, etc. But it was generally a residential landlord. That was its fundamental business. When Helen came into the business in 2015-16, it was in a bit of a state. It didn't really cover its overhead with its income, and was relying on development profits and sales to run. And she decided to turn it into a sustainable business. So her strategy was, right, we are going to be a specialist build-to-rent developer, investor, landlord. I don't like the term landlord. I prefer service provider, but that's what we're doing. We call Our people are customers, not tenants. And she sold some non-core parts of the business and redeployed that money into new build to rent. And I was brought in 2 years into that when they had started on that journey. And my job was to try and buy some land and help them deliver their the homes, the pipeline that they already had, and watch as this business got it right, bought well, changed its operational platform to become now the largest listed build to rent provider and one of the biggest build to rent providers in the country, and doing I'm really proud of what we do because we build homes. We're not premium build to rent. We're delivering good standard homes, and we'll deliver affordable homes within that. So I do that. That's my day job, but I also deal with, we have a master development strat land portfolio, which we're working our way out of. And because of my background, I also inherited what we call the refurbishment and technical services team, the building surveying team. So that's about repurposing assets or redeveloping assets, or in fact, something we're doing at the moment is looking at net zero carbon upgrades for those buildings. So I get to deal with the existing stock and
That's
also
very
new stock.
interesting. So I think we've spoke previously. I told you about my first ever house I bought from Bradford Property Trust.
Yes, yeah.
That I think Grainger either bought or
We
took
bought,
over or
yeah.
something years and years
We
and
bought
years
their
ago.
portfolio. That's right. Yeah. In fact, we bought that business. Yeah.
So I'm guessing, like as well as obviously the new build to rent stuff that you're doing, is there still a big historic portfolio?
It's getting smaller because the idea for the business is through a process we call asset hierarchy, is to sell the non-core parts of the business that provide income to reinvest it into build to rent. So it is getting smaller. I think we've still got a fair sizable regs portfolio, so regulated tenancies, set rents. And then we have some older style PRS buildings, which might be smaller. So if you describe build to rent as probably for us 150 homes with an amenity and an on-site presence, that's build to rent for us. We own some large PRS blocks, so private rental sector blocks, and then some smaller blocks. So we need to maintain those, and we need to upgrade them and asset manage them and see if we can get more value from them. And some of those we will divest, and some we will repurpose and reposition.
Interesting. So, and you mentioned, I didn't realise you mentioned a bit of strategic land stuff as well.
Yeah. So Grainger, again, being all things to all men back in the day, they had some strat land sites. So we own a big site in near Waterlooville called Beerwood, which we're the master developer of. We put all the infrastructure in and then sell phases to house builders to deliver against our design code, which we're really proud of. It's an amazing site. And we also we provide a service to Defence Estates at Aldershot on what's called the Wellesley development, which again does the same thing. We put all the infrastructure in and sell phases to the house builders, including the renovation of the Cambridge Military Hospital by Western Homes, which is an amazing centerpiece to that development. So we do some master development, but it is all legacy stuff. And then we own sites around the country, places like Dorchester and Didcot, where we are seeking an allocation for housing. And again, we will probably either sell phases or we'll get the consent and then exit.
Interesting. And I'm guessing on some of that, but will you not develop a bit and for the portfolio?
We have built a couple of phases of build to rent homes at Beerwood and Wellesley, and we will look at that in due course. But at the moment, we're still in the phase of trying to get an allocation in the local plan and then get an outline consent. So we know all about the process of how long it takes to get an allocation, a local plan, and then a consent, and the hurdles and the objections to that even happening in the first place.
Yeah. So this could be a very long conversation with us. I know that, and we're going to go off probably on all sorts of tangents, but because I know talking about strategic land and outline consents and how long it takes might be a good jumping off point to talk about land banking.
Yes.
Just as an example,
yes.
right?
Yeah.
Because I think there are. I mean, look, I know you're quite vocal on LinkedIn. Some of my sometimes, and there's just so much misunderstanding about how this whole business and industry works, which is really why I wanted to start doing this. Because whilst there's policymakers and planners and people out there not getting it and shouting
Yeah.
their mouths off,
Yeah.
it's just it's hard enough anyway without people not understanding how it
Yeah.
really works, right? So land there isn't really land banking does not exist, right? You know that, but this is just for the viewers,
Yeah.
right? It makes absolutely the way land banking is implied, i.e., developers tie up land, get planning permission, and just sit on it waiting for the price to go up. I mean, that is absolutely ridiculous. At the end of the day, it's business, right? You just want to turn your money over as quickly as possible. It just does not happen. So maybe you can explain a bit more about that.
So land banking is one of my trigger words. It makes me really angry when I hear it because
me too.
It shows such a lack of understanding of what actually is involved. So no developer, especially not large house builders, could possibly buy a site and then sit on it and hope the value of the land goes up and that will make their return on the investment into the land. It's absolute rubbish. I think it comes from the idea that classic strat land site, you might get permission for 3,500 homes. Funny enough, you might not buy all of the land for that. You might have optioned it in phases. So you effectively get your outline consent, 3,500 homes. After you've done that, you then have to spend money getting the full planning consent, which we will call reserve matters, for that site, and also put the infrastructure in, which costs a lot of money, the roads, the sewers, all that sort of stuff. And you want to make sure that when you do that, when you do your first phase, that you're getting a churn of money back. You're not making a loss at the start. You need to try and make it profitable all the way through. But that 3,500 homes, and there was one near me in Winchester actually, Carla Homes. That's 15 years of 20 years of supply to that market. You could not deliver 3,500 homes to that market because it just wouldn't sell. You'd have reams of empty houses tying up the capital that is tight, right?
Yeah.
People think house builders have loads of money. They're not short of money, but they can't have it sitting on a site doing nothing. And as you know, house builders work on a very simple model called return on capital employed, which is if I put this money in, I need to turn it around and get it back out again so I can do the next phase and the next phase. So people look at 3,500 homes and bemoan the fact that, well, they didn't build them. They are building them, but they're building them to what we call the rate of sale, which is the market can absorb, let's say 4 a month, whatever it might be, different market, different amount, but it won't be masses. And so the house builders meet that market demand. And the idea that they are sitting on land for land inflation, I mean, land hasn't really inflated for years anyway, is nonsense. The idea that a house builder or any manufacturer would ever oversupply into a market and think that they've got a sustainable business, be like Apple just flooding the market with iPhones and going, oh, right, we can't sell those, so let's make it 600 quid and lose money. But no one does that. It's not sustainable business. So it's just a complete misunderstanding of what an outline consent means, what a reserve matters consent means, how the house builders need to operate to remain sustainable, and the amount of money it takes once you've got a green field with an outline, a reserve matters consent, the amount of money that it costs to put the roads and the sewers and the electrics in and the road junction or whatever it might be. Yeah. So whenever I hear land banking, my head drops because it just shows a complete lack of understanding of the complexity of what a house builder does. Now, we're not really a house builder, we're a residential developer. We have the same issue. And our problem is, unlike house builders, they can buy a phase or maybe buy some land and they've factored in, it's going to come forward over 15, 20 years. When we buy land, we're going to have to build it out pretty quickly to get our 200 apartments ready for let. The longer that takes through planning or whatever it might be, the worse it is for us, and the less viable it becomes to do that. So land banking in urban sites is a ridiculous idea because the land value you pay for urban sites is so much higher than you pay for green fields.
Yeah, absolutely. And so just for add some other bits in there because there's a whole load of people listening and watching this that have a different whole range of understanding and knowledge, right? So just to add some bits, right? House builders very often, they might say in their account something like, we've got 20,000 plots in the pipeline or whatever. Now, one, they need to say that because the city and investors need to know that, they're a good long-term business with a sustainable pipeline, and they ain't going to be running out of land next week. That's one thing, but that does not mean it's 20,000 or whatever the number might be consented plots ready to go, right? Because the way the planning process works is, let's just say I think you mentioned 3,000, right? So you've got a potential site for 3,000 homes that will typically be controlled, not owned, controlled via either an option agreement or a promotion agreement, right? Which is effectively buying the developer or the promoter or the house builder time in order to then hopefully, and it's not guaranteed, hopefully get the thing allocated as a potential site. So that's where, and typically you'll go for an outline application, which is sort of like,
development in principle.
I don't want to say, I was going to say permission in principle. I didn't want to use that term because there is a thing called permission in principle, which is a complete waste of time, but that's a whole nother conversation, right? But it's effectively development in principle. And, that, like you said, Carla, that can take easily 5, 10, 15, 20 years to get.
Correct.
Right? And a lot of time and a lot of money, and you're still not guaranteed that you're going to get it. And then even when you do hopefully get an outline permission, you've then got to go back for what's called reserved matters, which is all of the detailed stuff, which can easily take another 2-3 years, and even longer if you're unlucky, right?
Yeah.
In order to come up with the thing like a planning permission that's ready to implement,
you can build,
right? And then, of course, and we haven't even talked about infrastructure yet, right? And at the same time, you've then got to get, obviously, roads is under your own control to a large extent, right? So
on your land,
you can build your own roads on your land, but when you've got junctions and stuff outside your land, like connections to existing highways, new roundabouts, services, gas, water, electricity, all of which is now out of the public sector, private companies that you can't make them go any faster than they want to go. And so you might even have a site with detailed planning permission that you can't start because you're waiting on all of those things. Yeah. And I don't think most people wouldn't really know that or realise that until and as you all know, right? Sitting on the consented site. And to be honest, it's one of the biggest problems now in large scale development is infrastructure, really, and not being able to get it.
Yeah, absolutely. So I think people's perception is small development. So it's by a road. So someone's knocked a house down, they're going to build 3 houses, and all of the infrastructure's there, the roads, the power, everything, it just gets connected. They don't understand the huge amount of effort that goes into, as you say, putting the infrastructure in. Fortunately, now we probably won't be using gas. So you won't put gas in because it'll now be air source heat pump. But highways causes us a huge problem and huge delays on development, amongst other things. But I'll give you an example on electric. People won't know this, but there is a power shortage from West London out to Reading. Because the national grid doesn't have enough power to deliver all the data centres and the housing consents. And we, at one point, asked for power to a site of 400 homes in Ealing. And this was about 3 years ago. And they gave us a quote, which was a pretty high quote, a couple of million quid. And they said, and the great thing is you can have this power in 2030. And that's the first time I've ever seen this. And we're like, right, well, we have consent. It's 2022, 23. We have to wait 7 years. And you can't develop without power. You need the power there. And you can, power is a big problem. Roads are an issue. Water's a big issue. For example, Cambridge doesn't have enough water. So there are huge things that hold back development and cause delays. And I think that's why the nitrate phosphate issue that arose recently caused such a problem. You actually had detailed consents ready to go that couldn't happen because the nitrate phosphate issue hadn't been resolved. There's a huge, again, it's the iceberg thing. People don't, they see the iceberg, they see the bit where the bricks start being laid and the roof goes on. They don't understand how much time it's taken to get there, how much time, effort, and risk one takes to get there. They just see the fruits of all that labor and think, oh, this is easy.
Very good. Yeah, well, it's not very good, actually. It's very bad, isn't it? But that is a classic example. There's so much going on. The general public, and I've got to tell you, I mean, even lots of, planners, they've just got no idea. And particularly, now here's another thing. This is my other pet subject, really, is viability.
Yes.
Yeah, because getting deals to actually stack up has always been the name of the game, right? Is how do I maximise the value of this bit of land in order to incentivise and persuade the landowner to do a deal
Yes.
that's still also at the same time making me a reasonable profit margin to cover the not insignificant risk, right? So viability has always been the issue, but as of course, costs have massively increased over the last 5 years in particular, stuff has got increasingly unviable. And I've got to tell you now, personally, I mean, I think viability is the biggest issue in development.
There's absolutely no question that viability is the biggest issue. So if we talk about the theory, so all developers work on a residual valuation method, which means after all their costs and all the income that they can make, what pops out the bottom is how much they can pay for land. And that figure needs to be enough to pay the landowner or incentivize the landowner to sell. So if that figure is below the existing value of the land as it is, whatever it may be, farmland or whatever it might be, they're not going to sell. And it's also got to be higher than the alternative use value. So actually, let's forget about housing. Let's build a data center or a laboratory, whatever it might be.
Yeah.
So if you're a housing developer, you've got to hope that your residual value that you can pay for land is above existing use value and alternative use value. And if it's above those two things, also that still incentivizes the owner of the land to sell, because that's not guaranteed. So where option and promotion agreements work, of course, is that you've already agreed with the landowner that if, as long as you can get to this figure, they're happy, and that's the base on which you invest. But generally, that's how it should work. Now, that's theoretical. So what, of course, then happens is you offer to buy the land. Maybe you buy the land unconditional, or you buy it subject to planning consent. You go get your planning consent, and it delivers exactly what you thought. Or you get the planning consent you hope you're going to get, but in the interim period, because it can take 2-3 years, actually suddenly construction costs have gone up, finance costs have gone up, and maybe values haven't gone up, and maybe they're static, which is kind of where they are now.
I wanted to get.
Yeah.
And just to add, so actually, certainly on the bigger site, 2 or 3 years would be good going to get planning.
Now, you would be very, very, I mean, we assume now that it's going to take at least 3 years on an urban site where you're trying to build something that is in the local plan before you'll get through that whole process and get a Section 106 agreement, which gives you your consent. Easily 2 or 3 years now. If you're talking about a strategic land site, I mean, how many times is it going to get rejected and you have to appeal? But the thing about strat land sites is you don't have as much money out. Whereas when you buy an urban site, it's big land values and in your residual valuation, but suddenly the market moves against you and you've got your consent and you're thinking, right, I need to start. You can't. And the reason you can't, and I think this is the other thing that's misunderstood, developers do not have to build. So we invest in land to build, house builders invest in land. We will not develop that land at a loss. We will not develop that land below hurdle. We would be who on earth in their right mind would do that? And I think there's a kind of almost a twofold belief. One, the developers will get on with it anyway. They won't. Or actually they're making so much money that cost increase doesn't really touch the size, it's still viable. It's still fine. And you can talk about this until you're blue in the face to the viability consultants, planners, policymakers, it doesn't really matter, the general public. What tells you that we were telling the truth is when development stops. And right now we have a situation where we are developing the starts in development are down. And the only reason for that is a combination of viability and actually there aren't enough buyers out there either. So if you, there's a lot of talk about affordable housing and funding of affordable housing. If you speak to and grant awards for affordable housing, but if you speak to the house builders, they'll tell you, yeah, but the trouble is there's also not enough demand for these houses or apartments. Therefore, we can't, those prices don't make it viable. We can't go ahead. And I think you'll never get debt for an unviable site either. The banks won't fund you if the thing doesn't make sense. So that viability, it's always about viability. So when things are good, you would expect the land prices to rise because the residual valuation tells you we're making our profit margin, all the costs are there, that's the income. Prices will rise. They're not rising, and they haven't risen for a long time. In fact, they're going down.
Yeah.
That tells you that there's something wrong. And if the prices go down to a level below where it's viable for you to exercise your option or promotion, you won't do it. And if you already own the land, you won't do it. And if you don't own the land and they drop to a level which is around existing use value alternative, the guys won't sell. The landowners won't sell. So we are in that zone right now. And hopefully that the reality of not building homes, it's making everyone understand, actually, no, this is true. This isn't a game. This isn't people pulling the wool over your eyes. It doesn't work.
Yeah. And I think it's worth just reiterating that bit because, very often I show this chart from the Home Builders Federation, peak of SME house builders, 1984, and they massively disappeared. Dropped off the cliff until then, and it continues, right? And it's like, because I know there are a lot of people out there. They say, "Well, you would say that, wouldn't you?" Well, look at the figures, look at the numbers. I mean, that's no one's making that up. If it was highly profitable and easy, and we were all making fortunes, it would be going the other way.
Correct.
And it's like we're all in business to hopefully, obviously we want to make some money, but if you're good, right, you want to build nice homes for people as well. So we want to be doing stuff. We absolutely want to be doing stuff. There is, why would we not, right? If we didn't want to build houses, we'd go and be in a different industry, right? So the evidence is all there. We're not lying. If you want the housing crisis solved, you need to start listening to the people that are trying to solve it. And that's really is the people at the coalface trying to do it.
I totally agree. So another of my trigger phrases is you would say that, wouldn't you? It goes back to, I'd say, to Mandy Rice Davis during the trial where she said, you would say that, wouldn't you? And it is a terrible, terrible argument. And I think a certain politician said it around Brexit where we've had enough of experts. What a stupid statement that is. So we are the experts because that's our business. So people need to listen to what we're saying. And there'll be some people out there that will try and pull the wool over the eyes. But when a whole industry and a whole sector keeps singing from the same hymn sheet and can show an appraisal and show you why, people need to wake up and listen. The loss of the SME sector goes to capacity. So the trouble with the loss of the SME sector is they would be the next Redrow or the next Berkeley or the next Barratt's. And I was with Steve Morgan recently, and he said he couldn't set up Redrow again in this environment. There's no chance he would get his SME to grow. And of course, we're seeing the SME sector disappear. But that SME sector is essential to delivering, let's say, 300,000 homes a year, right? Absolutely essential. The skills and the willingness to take risk and all those, and the employment of all of those trade contractors. Without them, we can't do it. We certainly can't do it just working with the big 10 house builders. They don't have that capacity either. So the loss of the SMEs is a disaster, and it's actually the loss of SMEs, for me, is really, really simple to explain. It's less about straightforward viability. It's that the town planning process has become so long-winded and so risky that you don't know whether you're going to get consent or not, that you have to be really brave to put that much time, effort, and money out there on a whim that it might and might not get consent. And then if you're in the position that actually it did get consent, but it's taken an age and the market's moved against you, you can't develop. So you own some land that probably now you've overpaid for and you can't come forward. And that is happening time and time again. And that's why SMEs, why would you go into something? There are easier ways to make money. Why go into something that's really, really, really difficult? Why go into something where the narrative is that you're a danger to society and greedy instead of actually what you do, which is provide homes? And why put your house on the risk for that type of business? And the SMEs are falling by the wayside. It's an utter disaster. But if you work in development and you look at the red tape around development and all the asks of developers, you can see exactly why you wouldn't do it. And so you just leave open. The only people that can do development are the large balance sheet house builders and residential developers. And that's not great either, because then effectively you've got a market which is much smaller. They can control the market. Certainly big sites, there's no way a small developer could buy a big site. Just wouldn't be able to fund it. So the loss of SMEs is the barometer for me of the health of town planning and viability. Yeah. And by the way, on the town planning, a lot of people say it's not really town planning that's caused the problem, and that it's the lack of consents isn't really causing the housing crisis, because it's really the house builders' choice not to build, like the Barratts and the Red Rose and the Barclays, etc., because they're building to their rate of sale. That's all they'll say. What they miss is that an SME developer doesn't work like those big house builders. They put their money out on that site, and they probably will develop it when the margins are a bit thinner, because it's their money and they need to get it and recycle it. And so you're losing that part of the industry which would develop in other circumstances to tighter margins and infill sites is terrible. It is absolutely terrible.
So what do you think could be done to help encourage more SMEs?
It's a difficult question. So if you talk about it in really simple terms, it's twofold. How do you make the costs of what they're doing lower for development? And how do you speed up the process? They're kind of related.
Yeah.
Why they're different is keeping the cost down isn't about speeding planning up. It's about all of the things that are required of development for it to come forward. So that could be all the fees of planning, but also it's all the asks. It's this community infrastructure levy and the amount of affordable housing and all the other asks that you have through Section 106 or Section 278, etc. They need to take the burden off those small developers for providing that, and they need to massively speed up planning. So you shouldn't be having this huge delay on 5, 10 homes, 30 homes in places. Either we need that housing or we don't. But you have to do both, because even if you reduce the costs of development somehow by taking some of the tariffs off it, they've still got to get consent, and they've got to get consent in a timely manner. So it's both of those things, I think.
Yeah, you're absolutely right. That's exactly what it is. Yeah, you're exactly right. So that's exactly what it is. So, but even with speeded up planning and hopefully reduced cost for planning, we're still back. That's just part. That's a little part of the whole viability argument.
Yes.
Yeah.
Yeah.
So I'll tell you, actually, just as this is one of my little pet things, affordable housing.
Yes.
Right. Massively important. Right. I think there's also a bit of a myth that, developers don't want to provide it. I want to provide it. I want to provide loads of it. I grew up in a council house. You know that. We've spoken about that before. I would be putting 50% affordable housing everywhere if I could. Right. The problem is, actually, it makes things even less viable, right, because you pretty much got to give it away. So, and that is another big problem. And then jumping back to SMEs, let's take London for example. The trigger level is pretty much 10 units everywhere.
Yes.
So 10 or more, you're typically going to be looking for a target of 35%.
Correct.
Yeah.
Correct.
So that in itself, so many developers I know, they just stick at 8 or 9 units or small sites because they know once you get into, above 10, you are just into a whole massive argument and punch up about viability, arguing about what the costs are, arguing about what the values are. Whereas in actual fact, that shouldn't really be that hard to demonstrate. Problem is, no one wants to believe you. In terms of the council. So one that if the trigger level on affordable housing was raised, that would all of a sudden it would.
Yeah.
But anyway, but I get from a slight political point of view, it doesn't. Oh well, raising it to 20 units or 25 or 30 or 40 or 50 or whatever it might be, and requiring a lesser percentage, it's just not a good story. But the fact of the matter is, unless there's massive subsidy to pay for it, it's just you're just going to end up with more and more SME developers disappearing and 100% of nothing.
Yes.
So, what do you think about all of that?
So let's go back to residual valuation. Okay, so you can set a tariff of 35% affordable housing or 50% affordable housing. What people need to understand is that every single affordable home has a negative land value attached to it. It doesn't make money. It makes money for the developer. This is the other thing. I often hear, well, developers don't want to build affordable housing because it doesn't make them as much profit, which is wrong because they will price into their appraisal the profit they need to make from the affordable housing, delivering it, and then effectively the land pays for the affordable housing. It is a land value tax, a Section 106 affordable housing.
Yeah.
And everyone that in the industry that understands that. So effectively, why wouldn't developers build 35%? Of course they would, right? Because as long as the land value is set at that level, that's fine. And it could be 50%, 35%, whatever it is. Where the problem is, if you set that tariff so high that you can't buy land because it's below the existing use value or below the alternative use value, then that's a problem. But the real problem comes where you've set the tariff and then people buy land when looks like it makes sense at 35. And I'll come on to what affordable housing means in a second. And then in the process of the next 2 or 3 years, actually costs have gone up, values of static, finance costs have gone up. And then you get your consent, you look at your consent and go, it's not 35 anymore, it's 15 because all of the things have gone against you. And then your choice is either to not develop it and take a bath or sell it, or you go back into the local authority and say, look, it doesn't work anymore. I can't do 35. So the principle of setting tariffs for affordable housing is really good because it should mean the land value is depressed and pays for it. But it's got to be incredibly nimble if going gets tough, like it has over the last few years, whereby the reality is that site was bought in good faith at that price on that basis then. It doesn't work now. I think the misunderstanding that affordable housing is taxing the land quite heavily is a real problem. I think we need to get it understood. There's also the different types of affordable housing, so I can rank them in order of value.
Let's talk about that. I think that would be useful for people that don't understand how that all works. Yeah.
Yeah. So there are a number of different types of affordable housing. So let's start with the most valuable, which might get you a positive land value for it, is a shared ownership, whereby you're selling a portion of the property, or an RP, a registered provider selling a portion of the property to a buyer, and then they pay a reduced rent on the rest, and eventually they can own 100%. So that's shared ownership. That's a low-cost route to ownership. And because shared ownership prices tend to be pegged to the actual end price, they normally come up with a positive land value. Not big, but a couple of pound a foot, Then you've got affordable rent, which is 80% of market rent. But actually, not a lot of that is built, because what local authorities tend to do is they call it for affordable rent, but capped at local housing allowance, which means the rent's quite low. That is worth less than shared ownership. Then you go to, if we're in an intermediate home and what we do at build to rent, which we can come on to, you then have social rent. Social rent is probably 50% of the market rent. Its negative land value is enormous. So in London, the research we've done, you would, with zero land value on a site, so has someone handed an RP a site for zero and said, we want you to build social rent apartments, you would have to hand them about £300,000 in capital subsidy per home for it to make sense for their cost of capital. It is an enormous, enormous subsidy. If you're talking about building them in green fields and suburban locations, it's probably half that. It's like 150,000. But people don't understand that a social rent home loses money and is a massive drag on land values, to the extent, if you suddenly said it's 35% social rent, you've got no chance. Absolutely no chance. Which we are kind of seeing that kind of narrative even now coming out. So I'm not a big fan of social housing grant being issued on a unit basis. The reality is that a 1-bed, 2-bed, 3-bed, 4-bed social rent home needs a different level of subsidy to reflect the value of the rental income that's different. And we just go, well, it's 200 grand a home or whatever. That's nonsense. The amount of grant you need for affordable rent at LHA is probably half that, because the income stream's higher. And then the amount of grant you might need for you might not need any grant for shared ownership. In certain locations, some you will. So it all comes back. So if I can simplify it this way, the value of that home is directly proportional to how much income it gets from its rent, whether it's social rent, affordable rent. That's it. And the lower the rent, the lower the value. Therefore, the higher the subsidy.
Yeah, exactly. So just for if for anyone, if that's not fully getting that, to try to simplify it even more. So bottom line is, social rent, which is the stuff that's a bit more, that's like what most people would imagine
council housing,
old-fashioned council housing. Yep. Yeah, the stuff for people that are most in need,
yes,
and the stuff that's actually most needed,
yes,
yeah. So social rent,
yep,
because it's low rent, because that's all people can afford to pay,
correct,
right? Or it's fully subsidised rent, so the sort of council pay it for them. If you capitalise that up to generate an end value,
yes,
yeah, that end value is nowhere near what it would cost to even build the place,
no,
let alone finance
correct,
it and buy
correct,
the land.
yep.
And that is basically the crux of the problem. So without a massive subsidy,
correct,
and this is what that's the bottom line, really. It's just as simple as that. Even with zero land value,
yes,
you cannot afford. And the fact of the matter is, it's just pure economics. Look, it costs to build stuff what it costs to build stuff, right? And we'll actually come on to maybe MMC and that at some point, right? Because I know some people think that that's the solution, right? That's a whole nother conversation. But that's the bottom line. Yes. It costs to build what it costs to build.
Correct.
At the end of the day, development's a risky business. We're in business. We've got to have at least a reasonable profit margin
correct,
to make it worth our while to even
correct,
do it.
Correct.
That we're never going to get it funded, and no one's going to lend us money unless they've got a reasonable return and it's relatively safe.
And they're seeing that you're making a reasonable profit, because that effectively is what they step into if you fail.
Yeah,
absolutely.
Yeah. So that this is really the.
So I can put some numbers to it.
So,
So when you speak to them, the person in the street about this, they will not understand that, let's say, typically a social rent apartment in London is probably worth about £100,000 in investment value to the council or to the registered provider housing association. That's what it will be on their books, because its value is proportional to the income it releases, and the income's really low. And also it's the net income. It's the net income after all the costs of managing and maintaining that home. In their heads, they're thinking, well, that apartment must be worth 350,000, right? Because it's an apartment in London. So they have to disconnect. Well, yes, if it was private for sale, it might be worth that, but it's not. It's got in perpetuity a low income. It's only worth 100,000. So typically that you're building something which is worth £100,000. That's what an RP or a council will pay the developer for it. But it will cost 400,000 in total cost, everything included to build. That's why it needs £300,000 worth of subsidy. It's that gap. I can explain it another way to you, which is the if you invest in building that, if an RP invests in building that home without any subsidy, so invest the money, the income yield on that money is about 1%. So effectively, they spent all this money, so let's say 400,000, and they're getting 1% per annum out of the rent. But their cost of borrowing, their cost of capital is 5.5. So it's like deciding, I'm going to build a house for buy to let. I'm going to go to a bank and I'm going to borrow 100% of the money, if you could do that. And I'm going to borrow it at 5.5, and I'm going to build this beautiful house or apartment. And then I'm going to let it out at a really, really cheap rent that delivers me 1%. So I've got 5.5% going out and I've got 1% going in. And that is exactly why the affordable housing sector is in the trouble it's in now. Effectively, they've got such a low income yield from the social rent versus the cost of their capital, it doesn't stack up anymore, and they're having to cross subsidize. But no, you cannot get around that. That's just simple numbers. I think I often hear social rent, you just need to be patient because eventually it pays off its investment. It just takes longer. So in nominal terms, so that means that not accounting for the cost of capital, if you just take the rents and bank them every year, it'll take about 40 years for you to recoup the original amount of your investment. But the trouble is that what you've recouped there is today's value. And of course, the value of a pound tomorrow is worth less than it is today because of inflation or the alternative you could use with that capital. When you then put on the cost of capital, and let's call it 5.5%, because that's kind of the long-term bond yield at the moment for 30 years, it never pays itself back. It never, ever pays back. So no, that's not a sustainable business. For an RP who can't work just on nominal terms, they have to think about their cost of capital. I just don't think this is understood. Hope there's work we're doing at the moment, which will come out reasonably soon, trying to show this in pounds, shillings and pence. That's the reality. But the public doesn't know that social rent housing is that far underwater. It doesn't know that affordable rent's that far underwater. It just thinks, and it doesn't realise it's not coming out of the developer's profit. It's coming out of the land value.
Yeah. And so just to add, and that's one of the reasons, well, not one of the reasons, the main reason, when we're looking at a big site, and so there is an affordable housing requirement. The reason we end up looking at shared ownership and things like that is because it's the only thing that generates a little bit of value that can actually get the deal to work.
Correct.
Otherwise, like I say, I'd be doing 50% social rent everywhere, but you just can't because it doesn't work.
You can't without grant.
So you end up having to do, let's call it pseudo affordable.
Yeah.
Make it as affordable as it can be, but at a level that still just about gets the land to stack up.
So I'm personally not a big fan of shared ownership because effectively what's happening is there's a subsidy for people to own when actually we have a massive shortage of social rent homes. So any subsidy we've got, for me, should go to social rent and intermediate rent homes. It shouldn't be going to, in this context where we have a housing crisis and a waiting list of 1.4 million people and 130,000 families living in hotels or the PRS, every penny we've got should be going to solving that problem, in my view. In fact, if you look at the amount of social rent homes built per year for the last, 10 years, it's like 10,000 homes a year, which is minuscule and getting nowhere near approaching solving the problem. Plus, we've got right to buy. So actually, we're losing social rent homes as well by selling them off at discounts, which, again, for me, right to buy might have worked in the Thatcher era at 1979 onwards in a different environment with a different population, with a different demographic. It's an utter disaster now. And I'm really pleased Labour have tightened it up. But frankly, in my view, they should get rid of it.
Yeah, I agree.
I think it's an absolute, it's ridiculous that you would sell social rent homes and lose them when we can't build enough new ones. But the crisis and shelter and the Tony Blair Institute and others think we should be building about 90,000 social rent homes a year, and I totally agree. And I think we should be building enough social rent homes to reduce the temporary accommodation bill to zero, and eventually to get those people out of waiting lists and into housing, because our temporary accommodation bill is now 2.3 billion. That's a big number. And our housing benefit bill keeps going up and up and up. It dwarfs the temporary accommodation bill. It's bankrupting the nation. It's bankrupting local authorities. And the solution is social rent homes, but also we need intermediate rent homes, because there's a load of people out there that can't get on the housing ladder, that can't really afford the PRS, that need discount rent as well, which is where build to rent comes in. Build to rent, it's only affordable housing that it should be delivering is discount market rent, a form of intermediate rent. And that's why, and those homes will be delivered cheek by jowl, tenure blind as we call it, within a block, and they'll have exactly the same flat, exactly the same facilities, exactly the same service as people paying full rent. And that's brilliant, I think.
Yeah.
So we need that as well. But social rent, I'm afraid, is the thing that we need to be building. And we've talked about this before, but so I'm a developer, you're a developer, you're from council housing, I've got family in council housing. We know what social rent is and why it matters. And I like to make the point, you said it earlier on, social rent for people in need. In actual fact, it's for people we need, right? That's the way we should see this. The people in those homes generally will be people doing low paid jobs, which we absolutely need. And we want to give them a start to bring up a family and find a stable base and then become more productive for society than they already are. They are people we need. They're not in need. It's not charity. We need these people. So the issue is, if we say on a viability basis, say, well, actually, I can now only deliver 15% and I can absolutely prove it scientifically, that's what I can deliver. And it won't be social rent. It'll be full of shared ownership and the highest intermediate rent I can get away with, or the developer can get away with, because they've just got to make it viable. We're doing two things. One, we're delivering sites in fields or in urban locations, delivering 15%. Well, guess what? That field and that site can never be developed again. So we lose the opportunity to put 35% or those homes in that location in a town centre forever. That is a huge missed opportunity. And so I lobby for housing grant to deliver. We like delivering 35% housing. Most developers do. They don't mind it because it doesn't impact them. It's not coming from their profit. But when it doesn't work, that's where you need subsidy. And the subsidy should come in and make sure that every site delivers the maximum amount of affordable housing that it can, that also gets to that, whatever the land value might have been, and also gives the developer the return they need, or they won't invest. And so that's why we desperately need social housing grant. The government's announced 39 billion over 10 years, and I'm really pleased they did that and sent a message, and they've given a rent settlement to the RPs, the housing associations. That's all great. But the problem is, the numbers are, for every 90,000 homes, if you built 50% in a field, 50% in a town centre all over England, the subsidy required for 90,000 homes per year is 18.84 billion a year. So that's a lot of money. But that's the numbers, and there's no getting away from it. And that will not come from land value, and it will not come from developers' profits. It's just impossible. We have to find that money. Now, we might not be able to build 90,000, but we need to find more money. And it breaks back to about £210,000 a home on average. It'll be, as I say, it's different for 1, 2, 3, 4 beds, and it's different in a green field versus a town centre. But we've got all that granular detail. But without that money, nothing will happen, because it can't. That's the way the private sector works. It cannot deliver if it doesn't hit return hurdle. But it's also the way the housing associations and the councils work. If anyone thinks that housing associations and councils don't have a cost of capital at around 5.5%, they must absolutely meet, they're deluded.
Yeah. And also, as well as all of that, it's also just how the thing with land values works. That's for me is the key, really, because let's say at the moment, even with free land,
Yep.
yeah, you couldn't build affordable housing without a subsidy.
No.
So, you know, the bottom line is it needs big subsidy.
Correct.
Otherwise, it's not going to happen.
Correct.
That's probably as good a place as anywhere to wrap this bit up. I know we've got plenty to talk about, so I think we might as well call this a part one, and then we'll carry on just so people aren't getting bored and falling asleep, and we'll talk about all of the other stuff we want to talk about.
Perfect. Thanks for having me.
Thanks for tuning in to Inside Property Development. Please remember to like and subscribe. Do join us every week where we'll be speaking to house builders, developers, experts, planners, and everyone involved in trying to get more much needed housing created the right way. We'll learn together how we can collaborate rather than fight, and by working together, we can all help create better places, spaces and homes and a much more beautiful world.